And if Christian and Ray are here, yeah. Christian, CEO and founder of Fonbnk, and Ray Youssef, CEO and founder of Paxful. Everyone I just mentioned, don't let the room fool you. This is our most attended and subscribed session through our virtual audience. And so we've got quite a lot of people watching from around the world virtually. So if you speak, make sure you speak in the mic, or they're going to start bugging the heck out of me and making negative comments on our app. So welcome, everyone. Thank you. Pomy.
I would like to extend a warm welcome to our panelists and to our audience. My name is Pomy Ketema. I am counsel at Baker McKenzie, LLP in New York. I practice in the areas of transactions, tax, and trade. I have done a lot of work with technology companies in terms of market penetration strategies, particularly in Africa. I will be the moderator of this panel. I'm going to make a brief introduction of each of our panelists. And then as we delve into our discussions, we will get to learn more about them. All very highly accomplished individuals. I will start with Chris Maurice. I'm going to do this in alphabetical order. Chris is the co-founder and CEO of Yellow Card Financial LLC. Yellow Card is the largest cryptocurrency exchange in Africa. It recently closed a 50 million Series A fundraise and has major financial backers such as Square. The company is committed to ensuring financial success across Africa with easy access to cryptocurrency. Welcome, Chris. Next is Christian Duffus. Third chair down. Hi, Chris. Christian is founder and CEO of Fonbnk. Chris is a three-time fintech entrepreneur, an early crypto builder and investor. Fonbnk is a decentralized finance company on a mission to on-ramp the unbanked and underbanked people across mobile-first markets into the digital economy. The company leverages the widespread penetration of billions of prepaid mobile SIM cards to enable interoperability between the Web3 internet and traditional fiat-based monetary systems. Welcome, Chris. Next is Obi, chairs down. Obi Emetarom, founder and CEO of Appzone. Obi describes himself as a serial tech entrepreneur. He has focused his entire career on the fintech sector in Africa. He founded Appzone in 2008. Appzone is a fintech software provider building out the core infrastructure for digital financial services in Africa. The company provides software that holds account balances and runs entire operations of banks in a fully digital way. Obi has led Appzone's expansion to a headcount of more than 300 individuals, serving more than 500 banks in 7 countries. Welcome, Obi. Last but not least, Ray. Ray Youssef, founder and CEO of Paxful. Paxful is a global peer-to-peer fintech platform built to provide equal access to anyone, anywhere. It has over 9 million users. Paxful enables financial inclusion by giving access to nearly 400 different payment methods to buy, sell, and trade digital currencies. Paxful was named Time 100's most influential companies in 2022. Incredible. Okay, well, I'm going to fire off the first question. How are cryptocurrencies redefining the meaning of money? Obi, you want to take that one?
Okay, yeah, thank you very much. Yeah, so the way I like to think about it is there are 2 broad parts of money. There's the value we all ascribe to it, so what it's worth or what types of goods and services it can get you. And there's the representation of it, which before now had been mostly some kind of physical representation. So in the old days, shells or gold or silver, and then more recently paper, right? So the way I think about it is digital currencies are changing one aspect, in a major way, which is the way it's represented. Digital currencies don't change the value ascribed to it, but for the first time in the history of money and financial systems, the representation of the money is now purely digits stored on a computer somewhere. You know, what that does is, for some of us who are involved in digitizing payments, the part of what affects digitizing the old form of money for payments is that the physical representation, which is still physical, has to move at some point, right? So even if the transaction seems instant, there's still a whole lot that has to happen at the back where the actual physical money sits. That process is it's just so cumbersome. You can't move it physically, so you have to reconcile records of who has what of that physical amount sitting in different pools. For the first time, because the representation is now a digital record on its own, it can move instantly. Like the actual representation of what represents that value can move at the same time whoever is initiating the payment wants it to move. So it takes away all of that, all those sort of processes and the time and the cost involved in doing all of that, which is why with things like remittances, with things like all the other use cases, you know, with things like issues around cost, issues around speed, you know, this new wave of money is really the future.
But is it fair to even call it money? It's not legal tender, and its features are unique. Some famous people in this industry have called Bitcoin not a coin, but software. So that's different. It accomplishes what money accomplishes, and yet may not even be technically money. What do you think of that? Anyone else want to chime in?
Yeah, I mean, when you have a crypto kitty or an NFT, by the way, I just created my first set of NFTs the other day. But when you have these, it's really a store of a value transfer, right? And now that things are digital, and as long as two parties agree to the value of something, it may as well be, it's not necessarily a legal tender, but it is a complementary currency. And that's maybe probably the true definition of what a Bitcoin or many of these things are versus a fiat currency.
Okay. Any thoughts?
It's better than money.
Oh. Right?
All right, so I have to give a shout out to Bitcoin right now. We're talking about cryptocurrency right now, but Bitcoin is what began me on this journey. And the first thing I learned is what money actually is. It's not a piece of paper. It's not even gold or silver. It's just human work encapsulated to transcend time and space. An awesome invention, right? There's nothing wrong with money. There's nothing dirty about it. That's beautiful. And in that sense, Bitcoin is most certainly money. Why? Because Bitcoin is honest money. Bitcoin is created by work. Bitcoin is a very novel feature in it called proof of work. All this electricity and all this computing power go into creating a single Bitcoin. All that electricity, all that computing power, there was humans involved in that process somewhere. It certainly wasn't a central banker typing $18 trillion into a keyboard and hitting enter, right? So for that reason, it's the best money we've ever known. Now, let's go back to your original question, right? So we know what Bitcoin is. We know what money is. How is it redefining the concept of money? I think the first thing we need to realize is that the whole concept of money over the past 100 years is broken. It has been damaged by the world. You know, people living in the Roman Empire had a healthier system of money than we do now. You could take one of their gold coins in Milan and go trade it in Iran or Carthage or anything. Now we're in a world of financial apartheid, right? Where if you're not in the golden circle of Western finance, you are not part of the club. You have a bank account in your country, Nigeria, Kenya. Okay, good for you. Good luck trying to send money to the country next door, let alone into America or China. You are unbanked. You are not part of the club. Now what we're seeing is, for example, on my marketplace, Paxful, Last year, on average, 16,000 successful trades were completed a day just in Nigeria alone. And they weren't just trading with each other, they were trading with other African countries. They were trading with China, with America, with Europe, with Fiji, with everyone. So how is it redefining? If you look into the mind of the average man and woman on the street, and this is something we all have to do in this space, let's think about that man and woman on the street. They live with so many limitations. The thought of a guy finding a great deal, a merchant in, say, Lagos, finding a great deal on video games on Alibaba, he's like, okay, great, but how am I going to pay for it? He couldn't access that. Now he can just acquire some Bitcoin with an internal bank trade in Nigeria and sell that Bitcoin to a guy in China and ask him to pay the invoice for him with Alibaba. This is the ingenuity of human beings being unleashed. So if you look at that man or woman on the street, I would say, and I do look into their minds because I talk to them every day. I'm CEO, but I love doing customer support, right? Keeping you connected. They finally have a path, and their ingenuity actually means something now. Bitcoin is that tool set that is their global financial passport. And they are broken out of this little box that they're in. That's beautiful. That's a hell of a redefinition.
It is. Well, I think we're going to want to talk a little bit more now about practical uses of these cryptocurrencies and the growth that we have witnessed in Africa. Africa is considered the top third in terms of a growth market. And it has grown the use of cryptocurrencies about $105 billion in a one-year period between July 2020 and 2021. What is driving this growth? And in terms of growth, we should be looking at maybe individual user growth versus institutional versus sovereign growth. Where are we seeing all this growth and what is happening on the ground with cryptocurrencies? Who wants to take that one? Chris?
Sure. I mean, I think like Ray said, right? If you have a bank account, right? If you're in the financial system in certain countries, you're not actually in the financial system, right? You're still not able to actually interact with people across the world. And so when you look at what's driving the growth for crypto, right? You look at like the Chainalysis data, and Africa, despite being, not the largest continent in the world for crypto, is sending, the second most transactions, right? Sub-Saharan Africa. And the reason is because it's solving problems that people have every day, right? It's enabling people to actually be able to pay invoices. It's enabling people to actually be able to get money to friends and family wherever those friends and family are, right? Another important point, right, is we talk about Bitcoin in the global context, right? But when we look at it just within Africa, like Ray said, countries, you could be next door and you're not able to send money across borders, right, using the traditional financial system. And I think when people think about diaspora and people think about sort of remittances and all of that, people always think about it from sort of the West into Africa, right? But the reality is more than half of Africans living outside of their country are still in the continent, right? And so there is a ton of money that needs to move between these countries, and it all has to move extremely informally right now. And crypto is the first technology that actually solves that problem, right? There are fintechs that are building solutions, but a lot of these fintechs are just making really crappy underlying infrastructure look pretty. Mm-hmm. Crypto actually comes in and solves that fundamental problem for everybody, right? And so that's I think that's the best way to think about all these transactions that are happening on the continent is it's people actually doing what they can't do with their banks.
I think you mentioned a lot of cross-border movement, and in Africa, we're witnessing growth in intra-African trade. And with that are coming online some systems. One of them is the Pan-African Payment and Settlement System. What does crypto do, or does it complement or compete with the PAPs? And I think this is an OB question.
Yeah, so PAPs is a great initiative, and I try not to sound, but anyway, the thing is, So PAPS has taken a while to come, leveraging a lot of the legacy technologies to solve what is a big issue. But the thing is, right now, with new technologies like blockchain and crypto, you start to see situations where some of the problems PAPS is trying to solve can be addressed sort of more efficiently, more reliably, lower cost. So what I think, but the thing about PAPS is you have this huge support from the regulators across board. And that is necessary to sort of get the needle moving. So I see some kind of synergy where the sort of backing and support that the PAPS can have based on its institutional nature and reach across the continent can be complemented by more innovative cutting-edge technology like you see on blockchain and crypto to give a result and produce a system that is just like the best of both worlds, all the worlds. So for example, we have had some conversations with the guys at PAPS about how this complement can happen, where, for example, processing fiat payments on a blockchain can be more efficient while leveraging the fiat reserves that are backed by PAPS, the credibility. Another way is where even though the last mile payments are in fiat, the settlement layer can happen through a stablecoin on the blockchain, make it just more efficient and real time and all of that. And they're quite excited about this sort of potential collaboration to sort of enhance the system. So that's basically what I'll say. But ultimately, the new technologies will ultimately solve the same problems that systems like PAPS are trying to solve in a better way in the future.
Okay. I'm going to go back to Ray with the next question. Ray, you wrote an editorial where you said Bitcoin is not for the millionaires, it's for the millions. I may be misquoting you a little bit here, and that is a peer-to-peer financial system for the masses. When we're looking at Africa, and we have a largely cash-based society still, and you've got the unbanked, financial inclusion is a major issue. What is your vision here? What are the opportunities and the risks for individual users? And what can be done to accelerate their economic development?
Well, my vision is pretty grandiose. I see a golden age for the entire world, and I see it led by Africa. You've got 600 million young people, bright, ambitious, ready to work, unemployed, the vast majority of them. All that work waiting to be unleashed onto the world, that is wealth. That is where the wealth comes from. So the question is how to put these people to work. And the answer is always trade, right? Free trade is a beautiful thing because free trade creates wealth, right? That's why merchants are rich. But how can you have free trade if you don't have the free flow of money? You cannot. And this is why some people are always poor and some people are guaranteed to be rich. It's not because the Black and brown people are lazy. It's because they are trapped. So what are they doing right now? I think Nigeria is an amazing example of this happening in real time. It is the first time in the world, in my experience and in my knowledge, that the youth of the nation are actually working to create their own financial system right under the noses of their own government. And the Nigerian government, when they saw what was happening here, I mean, look at the numbers. Last year in January, remittances into Nigeria were $2.5 billion in January. By September, that number fell to $55 million, right? What the Nigerian government looked at this and said, where did all this money go? And it was the youth figuring out that they could get their relatives living abroad to send the money back home with crypto, and they just converted to Naira on the fly with an OTC transaction on a Paxful, on a yellow card, on Telegram, WhatsApp, anywhere. Literally, the youth of Africa cannot be stopped. They have found a way to make the money flow again. And if you just do that and you keep it up for long enough, you're going to see all this pan-African trade developing. Let us keep in mind there are 2,000 payment networks in Africa, and only 3% of them talk to each other. rest of that money is trapped, right? So if you look at an opportunity, it's the biggest opportunity in the world. We have a land called Africa here with over 1 billion people that has leapfrogged over the whole land revolution. They all have mobile phones right now. They're young, they're bright, ambitious, they're ready to work. The hustle is on fire. What do they need? They just need the money to flow, and they are making it flow using cryptocurrency. Paxful represents a minute fraction of all the OTC activity in the world. Most of it is on WhatsApp, it's on Telegram, and it is happening right now, and it will be the fuel for a Pan-African financial movement. As far as risks go, maybe someone else can answer that.
Well, maybe we'll go to Christian next. Chris, I think your company has a system for using mobile devices, and I'm going to let you talk about it.
Thank you. So what's old is new at Fonbnk. In many respects, we're one of the, conceptually the concept of trading prepaid mobile airtime as a currency has been around for a while, but what's new is this thing called the blockchain. And what Fonbnk has done is married that too. And sort of the epiphany that we had was you have literally less than 1% of the world population might have access or own crypto today, but nearly 100% of the world population has access to mobile telephony. And of that 100% population, you might have over 100% penetration of SIM cards, which are essentially a simple store value account like that, we can make equivalent with our technology, a debit card over the top of banks and mobile carriers globally. And so the opportunity is, as we see these sort of underlay networks, telecoms is actually sort of this basic human right, and being able to equate that to a type of currency or commodity, as we're talking about in terms of, what are new things that this technology can do. We want to be that sort of foundational layer, enabling free and subsidized access into commerce on a global scale, but starting in the market where it all began.
Great. I think I don't know how we're doing it on time, but I want to switch gears and I want to talk about regulation. This is an area that is still evolving, and
I think we're at time.
That's a good one. You don't get off that easy. Maybe this is a good question for you, Chris. You have an aggressive expansion plan into Africa, and you're already you're running the largest crypto exchange. What are the regulatory hurdles that you're seeing for this industry in Africa?
Yeah, I think the largest regulatory hurdle that we deal with is figuring out what the regulation is. And this is a problem not just for crypto specifically, but for pretty much all of tech right now on the continent, is that laws in some countries are still catching up to the internet, never mind things like crypto, right? And so that's usually the first challenge when we're trying to go to any new country, is trying to figure out what exactly is the law in place, what are the regulations right now, to then be able to figure out how do we fit into that. Right. And so, with us, right, I mean, we operate from a local perspective, right? We have entities, we have, bank accounts on the ground, employees on the ground. And so the regulatory aspect is very important for us. And we've seen just about everything you can imagine, right, from the different countries. I mean, we have licensing in some countries, and then in other countries, they don't even want to have a conversation. They don't know what crypto is. They don't want anything to do with it. It's, whatever, do your thing, right? Mm-hmm. And just about everything in between, right? And so for us, I think I tell everyone this, the most important first step, right, after you figure out, it's above board, right? There's nothing illegal about it in this country. The first step is always education, right? I find that, in general, most of the regulators don't fully understand the space, right? That's, certainly, there are some that, really get it, right? But a lot of them don't understand the space, right? And so they have sort of misconceptions that they've heard from, from various sources, right? And the first thing that we try to do is clear that up, right? Bitcoin is a force for good, right? It's enabling economies to be able to function, right? It's keeping money in countries. It's not moving money out, right? And so that's really the first thing is how do we clear up those misconceptions? And then once we do that, we try to figure out, well, what are the goals? What are the goals of regulation for this country specifically, right? And once you have an idea of what the regulator is trying to accomplish in general with financial regulation more broadly in that country, then you can better align with them on, okay, here's a path forward, right? Here's what we are going to do to help with your goals and to help with, achieving what you're trying to achieve in this country so that we can move forward together, right? And so that's really the big part of it, right? And so for us, we want to help formalize the space on the continent, right? I think, what I tell people is like, I want it to be significantly easier for whoever's doing it next. Because we want the laws to be just a little bit more laid out, right? We're not anti-regulation by any means, right? I think it's regulation is good. What's bad is the complete lack of regulation and the complete lack of even understanding what the regulation is.
Do you think it would be easier if it were considered legal tender? Because then it will be like cash. Because right now it's not really properly classified because it does a lot of different things. It's a store of value. You can use it for buying, selling. You can do so many different things with it, and it doesn't necessarily fall squarely into something. And at least from my perspective as a legal services provider, the laws work such that you have specialized rules per classification of whatever it is. And now we've got something that is totally across the board on everything. And then it depends on how you use it, right? If you buy something using it, then it's like legal tender. But if you trade it like stocks, then it's like a security. So you have this ambiguous asset class. So what would be easier? I mean, you guys are the leaders of this industry. I'm going to throw it out to you to say, do you want something that's more comprehensive that really just focuses on this asset class, or is the current system okay as long as they provide clarification under the existing laws about how this asset should be treated? What do you think?
All right, so yeah, this is exciting and interesting for us because this is a huge area where we are playing. And for us, we believe to gain the kind of mass adoption for digital currencies in Africa and practically around the world, there has to be regulation. It solves issues around trust, around accessibility. In Nigeria, for example, accessibility is very low because of what the government has done with the ban. So we think there are like a number of issues that the regulators are worried about. And the way to think about it is to look at fiat. So there's KYC, there's AML, there's exchange controls, there's reporting, right? And so the way we think about it is, how do you bake those requirements in a native way into the ledger, right? Like into the ledger, so that all of the assets sitting on the ledger can inherit literally. So think of it like an account, right? That has the compliance in a way that whatever sits in that account, so it's not the amount in the account, it's the bucket that needs to meet those requirements. So for us, to the point what Chris said, there's an element of education, a lot of sort of working. So creating the technology in a form, like I said, that is easy to regulate. And then a lot of education of the regulators about how, hey, this is actually, so technically it's actually easier to regulate like blockchain. Yeah, it's actually easier because the immutability of the data and the logic makes it such that, like with the typical banking environment, right? You go audit a bank and everything seems fine now. The moment you leave, those guys can do something funny. You have to keep just chasing them each time, right? But with blockchain and crypto, the immutability is such that when you bake in automated governance and stuff that takes out human intervention, when you combine the visibility and the lack of human intervention, it creates a governance model that makes it actually easy to regulate. So walking the regulators through that journey, providing a platform that makes it easy to actually regulate and showing them, explain the value, right, in terms of cost, in terms of efficiency, in terms of reliability, in terms of scalability that this new technology has for financial inclusion, for the monetary system, is something that has to be, these things have to be done. The way we see it, somebody or some group of people have to do this for us to see mainstream, full mainstream adoption, where the ordinary man on the street connected to his phone can enjoy this freedom that Ray and all of us want to see.
I might add, whether it's a security or commodity or bank product, those regulatory frameworks already exist, right? And what's different is you have this sort of fungible sort of technology that it could be all those different things, even artwork. My recommendation would be to think about, not necessarily creating new regulation for cryptocurrency, but just requiring sort of, where it might end up. That's where sort of the regulatory line might start in terms of how it's should be viewed on a local micro level.
But let's take this a step further. One of the challenges with crypto is that it's borderless, that each country has its own set of laws. So from country to country, jurisdiction to jurisdiction, you've got entirely separate treatments where at some point it's going to become incoherent because you simply you can't piece them all together to come up with something that for which I can advise you if you're doing things in even 7 countries, for instance, that might be, each one could be drastically different. Do you think maybe a global standard is appropriate, or should we wait for this industry to mature and see where we land before we go down that path?
Well, I definitely think there should be like a safe harbor time period for that. But I mean, again, this is the nature of a decentralized system, is that you can have this fungible thing that could be different things at each endpoint that it ends up in, and those rules be baked in at that country, right? Unlike money that you just push it through and that's why it just doesn't go. Well, Bitcoin, Ethereum, whatever the protocol is, it could morph into, that end point, and the user could then input whatever required, or the system could do that there.
Yeah, so I think it will be a little bit of both, just like we've seen with all the other regulations. So typically regulators connect and share best practices and stuff. So there'll be a common body of regulation that you see across, but we're also likely to see peculiarities that for funny reasons or another would sort of tailor it in a certain way. So for example, in Nigeria, the difference between the official rates and the parallel market rates creates a huge concern for the regulators around exchange control. Mm-hmm. See, so that's just one, like if those things were, married, it won't be as big an issue, right? So you're likely to see some kind of, if there's a generic regulation around that, you'd like to see in a country like Nigeria, some more specific controls or constraints in that area just to cater for the peculiar nature of the environment. So that's what I think will happen. There would be some learnings of what works best across board, and you have that common pool, and then it's going to be tailored. The good thing about technology, like Christian said, is that, and this is something we're working on, is that you can bake those differences in at the ledger level. Yes, you can actually do that, right? So at the point you're creating an address or a wallet, because we know where you are, who you are, I mean, there's an ID and stuff, you can inherit the rules that apply in that jurisdiction, and it's very seamless because technology just handles it transparently.
So I don't have any insight on how this is all going to turn up. I'm not Racerdamus. However, I can share with you my story of talking with regulators all around the world, right? Just came back from Egypt. Central bank there considers crypto illegal, but they just allowed us to start educating people. Great. We talked to people in Nigeria, Ghana, many countries. Now, question in the back of my mind is, what are these guys so scared about? They always talk about, money laundering, terrorist financing, human trafficking, and all these things, right? But the truth is, crypto is completely transparent public ledger. You can trace that in real time. It's actually the greatest, it's actually a central banker's wet dream, a real-time circulatory system of all the money is flowing in the world. So their reason doesn't really hold up. So the more I talk to them, I'm like scratching my head, golly gee, what are these guys really afraid of that they're not telling me? And I finally figured it out. It took me about 10 years, but I finally got it. And actually Chris did a great job of summing it up. Obi touched on it as well. It's the elephant in the room, guys. And it's actually the biggest problem in the world. It is the biggest problem in the world. And I just figured it out after a long time, right? So I'm going to repeat it. And whenever I talk to anyone, especially students, I always mention this problem. This is literally the biggest problem in the world. These central banks are under pressure we do not see. They are under the pressure of the other central banks that run the Western world, right? Whether they're in New York or Belgium, and they're telling them, hey guys, slow down with that printing of your money. You can't just print up your own money and start building factories and schools and putting your people to work. That's not allowed. It's not allowed. Think about that for a moment. The greatest generative and creative power of any government is the ability to print up their own money so they can put their people to work. That is what creates wealth. That is the power of a government. If they can just keep the amount of money in circulation in balance with the amount of potential work that can be done, all those unemployed young people, wealth is the result. That's all that's needed. But they can't do that. Because if they start printing up trillions of naira, and putting half of the population, all these young kids to work building factories, schools, wells, roads, they're going to get a call. Like, hey, boy, you're going too fast. You got to borrow our money. You can't make your own. And if you don't, well, there are consequences. And the consequences are you could be the next Venezuela. Because it's so easy for those that control the Forex or those control price discovery to buy up a whole bunch of your currency OTC and then dump it on the open markets. And all of a sudden, half your population has lost their family's entire life savings. And these are very real consequences. And when we talk to these regulators, this is what's in the back of their mind. They're thinking, wait a minute, is this crypto Bitcoin thing going to take money out of my economy? And by money, I mean hard money, dollars, euros, because that's the only thing propping up their economy. Good news is Bitcoin doesn't. It actually can bring more money into the economy. But when you're talking to a guy with a gun to his head, you've got to be pretty damn persuasive. And we're all working on that together, right?
But I have to ask you a question on financial stability, because we're going to delve into ESG now, the ESG of cryptocurrencies. We see the benefit, financial inclusion, being able to give a lifeline to small traders who may not be able to have access to all these facilities, credit cards, bank accounts, and so forth. So the case has been made for financial inclusion, but there are other concerns. And what do you say about, the goal of government is to collect money in the form of taxes and build infrastructure, provide for its people. Your money, to some degree, is guaranteed if it's sitting in a traditional bank account versus a privately run system like cryptocurrencies. So what do you say? What would be the way to close this gap in the perception between regulators and companies in the sector? What's the value proposition for those who govern countries, who run central banks? What do they benefit? Reduction of unemployment, entrepreneurship, maybe additional tax revenue, being able to track transactions. What do you say about that? I'll give a chance to each of you to maybe chime in on this.
Yeah, I mean, what Ray just hit on is so critical when it comes to what is in it for the country, what is in it for the central bank, right? These central banks, at the end of the day, what matters to them is how many US dollars are sitting in their reserves, right? Because US dollars sitting in their reserves props up the local currency. It allows them to be able to access loans, right? It allows them to maintain debt. And so that is one of the most important metrics, right? That all of them have to pay attention to. And the unique thing about crypto is that it allows the economy to continue to operate without impacting those dollar reserves, right? And this is what Ray was touching on, right? Is I think the best way to sum it up is right now, if I'm a guy in Lagos and I sell shoes on the side of the road and I import those shoes from China, the way that works today is I bring $1,000 worth of Naira to my bank, right? I fill out a bunch of forms. I pray to God that the CBN approves it. And then once that money is approved, then the CBN has to now wire that money over to China, right? $1,000 has just left Nigeria as a result. Shoes come in, great. The way that same transaction is happening today on the ground is I have $1,000 worth of Naira. I buy Bitcoin, I buy USDT from any platform in the country, right? And then that money moves over to China. $1,000 gets to stay in the country in hard cash as a result, right? The economy continues to function. Imports are continuing, exports are continuing, and that hard cash stays where the central bank wants it to stay. Right. And so that is, I mean, that like Ray said, right. I mean, that problem cannot be undersold, right? It's so critically important that these dollar reserves are maintained because that's the only thing propping up these currencies. Right. And to your point, yes, money in a bank is guaranteed, but a guarantee is only as good as the guarantor. Right. And so it's, it only goes so far depending on who's guaranteeing it, right? And so, yeah, having those dollar reserves and being able to maintain those is critically important to these central banks.
In the developed market, people always ask the question, like, what does this get me? I'm using my credit card just fine. In fact, I get points and my bank account seems to work. There is a gap, definitely, in terms of the need is across the spectrum, right? And I think the fact that economic development is a huge driver for African governments is the value proposition. Is that a fair thing to say? And that somehow, if this can be worked into the system if integrated so that it works in the way that makes them comfortable, that would be a win-win proposition. Is that a fair statement?
Yeah. I mean, when people in the US ask, what's in it for me with Bitcoin, I tell them it's not necessarily for you.
Yeah. So absolutely. When you talk about financial inclusion and the cost of financial services, the cost of moving money, what digital currencies bring in is a world where everybody is financially included. And when you introduce DeFi, DeFi now drops the cost of accessing those types of products, lending or investments or savings to a point where it's universally accessible. Everybody has phones now, connectivity, payment, and then there's the reliability angle as well. It's part of the challenge we're having with trying to digitize fiat payments is that all of the different systems together, because they're not quite redundant the same way the digital currencies are, create levels of failure that affect adoption and affect trust. But that level of reliability, the cost, the fact that everybody can essentially have a bank account, not in the traditional sense, have access to lending to. There are models where you tie the loop of decentralized finance. So today, decentralized finance, lending decentralized finance is backed by crypto assets, right? So that's just the early stage of this. But there are models where you can tie lending to uncollateralized loans or requests, applicants, back that by decentralized insurance. So the loop is complete, right? Where it just pays for itself, essentially, and everybody has access. So when in a world where these things are there, the result is massive acceleration of economic development. Yeah. So this is something we really believe in.
And the replacement of a cash-based system where you can't track anything and the cash could be lost. So this is more secure.
Absolutely. So tracking corruption or
Anti-corruption.
illicit flows, visibility, like I said, regulation is easier, more effective. You regulate once and it's like that. Yeah. So it's just the benefits are like, it's just, there are too many. You just need to educate the guys on the ground.
I have one last question. We've heard about the potential maybe for forming a continental level central bank for Africa to facilitate inter-African trade and perhaps having a single currency. Where do you think crypto fits into all of that? Is that should we go through the trouble of setting up that entire infrastructure where we may experience some of the challenges that they use experiencing the euro and having that type of system? Or does this kind of crypto gives us a shortcut to getting there by just kind of finding some structures around it? What do you think?
That's a spicy one, sister. You have to open that one up. All right. All right.
You're the right person to present that.
Maybe the wrong. Well, all right. I'll take that. All right. Look, so let's look at the past. Last guy that tried to do this had 144 tons of gold lying around. He's like, hey, I want to issue an African dinar, Pan-African currency for everybody. What happened? He got hit with a cruise missile and then violated live on camera. It wasn't pretty to look at, right? So there are vested. I can't make this up. So I'm not going to get into all the depth beyond that. Let's just say it is a challenge, but it must be done, right? It must be done. How do we do it? Well, I think we need to take a note from Safaricom's book and just do it. Not ask for permission. We're in the permissionless business, right? It needs to be out there. The best way to do this, really, there's a few steps required. You're going to have a Pan-African currency. Great. Let's say it's backed up by Bitcoin. Let's say it's pegged to the euro, right? You can't just launch that from the start. What you have to do first is you have to launch a Bitcoin-backed, over-collateralized stablecoin for every single African currency. And then get traction going through all of that. That will eventually lead us to a Pan-African currency. Now, the question is, why would Africans want their own money as a stable coin where they're trying to get away from their own money and trying to get Bitcoin or Tether or whatever it is to escape inflation? And it's the same answer as why did Tether help the crypto space in the very beginning, right? It's because people could hedge their moves, right? If you're doing some big OTC trades and the only way to get access to Naira or shillings or Rand is to do a deal with the bank, that slows you down. So when you empower that level of operators start moving money around, there will be volume. And once there's volume and traction with that, there are roads to a Pan-African stablecoin. I don't know what crazy fool is going to do this first. I've been thinking about this for a while, but believe me, it will be an adventure. It's something that we should figure out together. Within the realms and tools of DeFi, there has to be a way for us to do this with limiting liability for any one person. Like you can cut the head off any one leader, right? But you cannot stop an army of mosquitoes. That's what peer-to-peer is all about. So we got to figure it out, guys, because it has to be done. The amount of wealth that'll be created from this, I mean, it's hard to quantify.
I might add to that rather than think like a banker, think like a technologist. And what are those sort of common standards that will allow these different countries and systems to talk to one another so that if one country wants to be backed by Bitcoin, they can do that. If another wants to have another type of system on another protocol, they can do that, and they can be interoperable amongst one another. And that's actually one of the big issues with most fintechs globally today is this lack of interoperability.
Okay, so yeah, I think there are two like broad issues. There's the whole what we've talked about, understanding the technology, getting them to understand the policymakers to understand how the technology works. But once we go past that, it's now more the logic of that kind of currency, like how the dynamics, how it works. So like Ray said, there's the option of over collateralized altcoins, right? where you can stabilize the volatility. There's the option of pegging against like a basket of African currencies, like the SDR, the IMF SDR. There's the option of pegging to a stable global currency like the euro. And then there's the option of like an asset, gold or something. And I guess the conversation would be all of the different regulators and policymakers in the different jurisdictions would have a view on how it should be. And there'll probably be a lot of debate and argument as to why and how. So for example, if you want to do a basket of currencies, then you're going to have the issue of which currencies are in that basket. Can it be all? Maybe not. If you exclude some and it becomes, okay, why are you excluding me? And then what's the weighting? So I feel like going past the technology layer, that conversation would have to be had to get like an inclusive adoption of that kind of thing. But definitely, like Ray said, it will unlock huge value. Mike said, I was just laughing when Mike said, we don't travel when we want to go from Nigeria to Ghana. We don't have to go to Europe first or the US and then back to Ghana. And we don't ship our goods that way. So it would help to solve that problem where flows for local trade, Pan-African trade wouldn't have to, go out and come back and really unlock lots of value. Yeah.
Is the system technologically ready for something like that? Or, we hear about cybersecurity issues and stuff like that. So what do you think? That would be a massive technological leap.
No. So the short answer is very ready, very ready. Yeah, like it's almost a no-brainer technologically, because we build these things. All of the technological infrastructure and tools required to get it done are already set out there. Yeah. So it's more of these issues. It's more of the education and the training, and then these sort of political issues that are the bigger challenge. We are working on a stable coin, which we hope would at least start with helping for settlement, cross-border trade, not necessarily becoming a reserve currency yet or legal tender, but at least for cross-border settlement. So on the technology layer, that is like, a no-brainer. So we just need to solve these other human issues. Yeah.
It'll take decades. Use Bitcoin in the meantime.
Okay, it sounds like we're out of time. So I thank my brilliant panel. Yes.
Okay.
I can speak louder.
No, you can.
I like where he ended that technology is the easiest thing to do. My name is Bosco Sebabi. I'm the Deputy CEO for PAPS. So we'll be discussing later in the afternoon about PAPS. And I like the idea we've been discussing with him, how things can move technologically. Two things came out of your discussion. One, about the Bitcoin, cryptocurrency, but there's also the other side of life of the central bank digital currencies, which the central banks are so thinking in your line. Now, why are they doing so? I'm a former central bank, so I'm not defending them, but I'm trying to align because I'm now doing something, the same thing, but I like to think about technology with economics. Why do central banks actually say, well, hold on? It's because they are the custodians of monetary policy. And when you're doing monetary policy, two things come out. Can go for inflation targeting, where technology comes in very well. You can also use monetary aggregates. The question is, okay, cryptocurrency is worldwide. How do I place my monitors on this monetary aggregate? Where do I place it in doing the monetary, in kind of classifying the monetary aggregates to be used as operating, so as to arrive at inflation management or inflation control and price control, price stability. So two things come out. So, okay, why don't I go as a central bank and replace some of my fiat money with a digital currency? So I think while debating with central banks. Go with the solution, say, well, I know where you're going. I know why you're doing this. It's because we have to execute monetary policy and implement monetary policy decision. But this is how we can help you do it. I like where you ended that. We need to look at how we have a basket of goods and stuff like this, basket of currencies to form one unit of account. So what we don't have in Africa is we are going through the traditional means on establishing a monetary union. We're going through the monetary traditional things of saying, well, we need a free market area, we need a common customs union, we need this. We don't need that. Technology is ready. We just need to change our mindset and say, okay, how do we leapfrog from here to here? And then have a unit of account. Now, a question comes in, how is the management of that unit of account? How do we manage this as nations or as, so everything is around how we can discuss how to satisfy each level's responsibilities. And of course, that's why the Pan-African payment and settlement system is there, because we're saying, why do funds have to go to New York and Canada before they come to my neighbor? Yet I can do it. And that leads to people driving out like you're taking cash. So I can find a solution where they don't have to do that, but go straight using our own institutions. So these are things that are so debatable. And I do agree with him that's just that we need to have the thought process aligned. Thank you. Sorry, I captured the mic without.
If no one else has questions, that concludes our panel. Thank you, everyone. Many thanks to our brilliant panel.
Quick note, lunch is served, and there'll be some people, it's a little bit confusing here, so some people will drag you to lunch.